Good day. Ira Epstein of Linn & Associates with your metals market update, and we are now on Thursday, the 4th of April, 2019, time just after 4:30 p.m. Central Daylight Time. Thanks for coming to the webinar today. I think we had a lot of fun, spent a lot of time on GDX. Now, I just was listening to President Trump's interview with Premier Liu, Vice Premier Liu from China. Robert Lighthizer was in the room as well, and a press conference. So I'm not making this up. I didn't have any secret way in there. I heard the president say very clearly, they asked him how long before there's a deal if one could be made, and he kept harping, if one could be made, how good it could be for both sides. He thinks 4 weeks away, and then another 2 weeks to write it. So when you keep hearing the president's ready to call President Xi and they're doing a deal and all this, like today, there was a rumor out about that. Nah, that's not the case. You're still a ways off on it. That's the first thing. Tomorrow, understand what we're walking into first thing in the morning. We get the non-farms payroll. We know that we had a really bad number last month. We had, what, 20,000 gain. Was it an anomaly? I don't know. Is the market going to be good, strong? The market's looking for 170 to 180,000 jobs. Maybe they'll even do a revision back there. If that all comes out good, how does that impact the market? And how does what the president just said impact the market? Too much for me to deal with as a trader. I don't like going through, and that's something I always teach people, major reports. I think this employment report, if it comes out bearish, what if it shows no job creation? What do you do with that? So when I'm looking at the gold market, and that's what I'm doing, you can see on a weekly chart, we're finished at 1289 today, right basically on that 18-week moving average at 1291.70. When you go to the daily chart, even though we closed lower, all of the trades in the last 15 minutes were higher than this 1294.30. At least that's what I saw. So again, you got to deal with what you got to deal. But this is an interesting setup, and you're going to see why. What the market did with this setup is you've got lower highs, lower lows. What breaks this downtrend? Taking out 1299. 1298.70 was the high, and if you go to your time and sales on your charting software, you'll probably see that I'm right. You were close to those numbers, not too far away. Where's the other battleground in here? The 100-day moving average of closes. So let's assume that the market takes out 1299 because gold's going to open tonight at 5 o'clock. It's got to wait for the morning. You don't know what's going to happen. I don't know if it's dropping, going up on this news of maybe up to 6 weeks before you have a trade deal. I don't have any idea. And then I don't know what's going to be in let alone I don't even know what's in the jobs data. I don't even know how it'll react to any number it gets. But in looking at it, if the market's going to stay in a downtrend, it shouldn't take out 1299. The support's back at 1292.10. If it takes it out, then I look for the price to possibly make a run for that 18-day average of closes and try to get back up there. But the important thing is nothing turns the market bullish. You can get out of bearish condition by taking 1299 because you'd break the pattern of lower highs, lower lows, but you can't get a bullish pattern. When you look at what it reached down to today, look at your lower Bollinger Band. That number is 1286.60. Today's low is 1284.90. Therefore, the market is satisfied on my terms. That doesn't mean they're yours. The first hit of the lower Bollinger Band and bounced away from that about $8 on the close. So again, my theory, the first time you hit these numbers, I think the pros step in and take some money off the table. That's all. Doesn't mean I'm right. Just what I think. In terms of momentum, you're oversold. So you have an oversold market that's hit some downside targets, still in a downtrend, going into a major report in the morning. In GLD, the market had a reversal. It reached down. You tell me where you got. Let's show you yesterday. This is what you looked like. I would be looking that if it breaks, I don't know if it'll break, but if it breaks down, next support levels, the lower Bollinger Band, the 100-day average of closes. If that holds, which it did, in coming back through 122.01, well, I'm going to argue. I think the pros took themselves out of the market there. I think the market's already negated the downtrend. I think it's a market that has no trend right now. It's got a higher high and a lower low. If it rallies, I'm going to look for resistance up here at the 18-day average. But what's very important so far is the sideways action that the market's developed in the Bollinger Bands. It's refusing to follow through on the first challenge of the upside or the downside so far. When I come over to GDX, GDX did not get to the lower band. It came down. The last break low is right here of 121.83. You managed to take that out. No traction at all. Reverse course. And when it got through, if you look at yesterday's high, 22.27, that negates the downtrend, puts into play the possibility, at least, that the 18-day average of 22.53 will come into play. You hit 22.54. I'll accept that as close enough right here. So we neutralized the downtrend, but I don't think it's begun an uptrend. It could, but it needs a little different type of chart action to get over the 18-day average of closes too. The gold-silver ratio has just gone flat. It just died. It's going sideways here at the 85.80 level. Silver keeps trying to probe and push out the bottom of the Bollinger Band, and it's not doing a very good job of it so far. It hits it, it does make lower lows, but then it snaps back instead of staying down on top of it. Resistance, a combination of 15.28, the 100-day average, and 15.27.5, the 18-day average. But if you get there, you're out of your downtrend, because you right now have lower lows, lower highs. If you get through 15.16 to get up to that number, you break that pattern. So maybe you're making a trade bottom low if you get up there. But again, I don't see a trend. To me, the copper market, and I walked out of my office this morning because I read, like most news wires, the first wire was the president is inviting President Xi in. And then the White House came out, and I waited on that before the White House put out their own announcement. And I said, why isn't copper up more on that news? Because, you know, the only reason I would think that President Xi's coming in, or Premier Xi, is because the deal's done. And everybody's talking how close this deal is. I'm listening to the man making the deal, which is the president. I listened to Mr. Lighthizer. He didn't rebuke the president. Now, they could all be pulling the wool over our eyes, but I have my doubts about that. I think you've got that 4 to 6 week window possibility, and copper acted like that too. Now, if copper gets real disappointed from here and takes out 289.70, you could have lower highs, lower lows, momentum turning down, bias down. The bulls have a problem tonight. You have the pattern of higher lows, but you've got lower highs. This market's gone flat. In the platinum market, I think that the platinum just exploded because palladium fell down again. Remember what I said? I think they were unwinding of this popular spread, and that's what I think is going on. As for the dollar, I don't see a trend just yet. I see a lower low, a higher high. I have a market that's got both numbers today that make up the slow stochastic over 80 on the close. Yesterday, both were over 80. Not the day before. So there's no edge. It's not telling me it's embedded. And it's making you, if you want to play this bull or bear, what are you going to do going into the jobs data? I don't know that either. You know, one of the things I like to do is talk about this, my morning subscriber video, because it is where I'm able to do the meat of what I love doing. I am able to say buy here, sell there. I'm able to say here's a high probability trade and why it's a high probability trade. This tape is not made available to the public. It's to my subscribers. You need a user ID and a password, and you're right. If you're going to try it, I want 26 cents a day. I'm not being funny. Because you're paying then, and I know that you're for real about what you want to do. All this free stuff all over the internet, it's probably worth what you see. It's free. But when I'm doing this, I'm putting out 10-15 minute video every morning. I'm going to add to this. My studio's almost ready in my home as well now, so I can wake up in the morning bright and early, and I do every day, and record before I even leave for the office. A lot of people want these recordings earlier, but what about in the evening sometime? You know, Sunday night we get ready for trade. You know there's no information out there. Our company writes a lot over the weekend. Most companies don't. I want to get a video done also maybe Sunday nights so that it gets the traders going before we even hit Monday morning. I'm going to throw that in anyways. So why not give it a try? What do you got to lose? $7.95. And by the way, we do offer a 1-year subscription for $156. You can go month to month. And no, I don't want a contract with you. You're not liable for anything. It's every 30 days it'll renew, or every year it can renew. Your call. How do you get to it? Go to our website, www.iraepstein.com. Under Research and/or Education, Ira's Morning Subscriber video will tell you all about it. You can buy it right there, and away you go. I'm Ira Epstein. Thanks for watching. See you tomorrow.